Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I'm Brian Boland. I'm the aggressive growth stock strategist here at Zacks. I've got a top stock pick, and later on, Andrew Rocco is going to join me, and he has got a top stock pick for the week. All right, let's get right into it, shall we? My top stock pick for the week is Microsoft, and that's MSFT. If you're following along at home, Microsoft right here. Here's your ticker, MSFT. It's a Zacks rank number 2. That's a buy. It's got a B for growth and a D for value. We're looking at very good earnings growth of 14% there. Looking at a gigantic market cap. We're getting a little bit of a dividend as well, and even a positive earnings ESP. Now, if you're living under a rock, you don't know about Microsoft. They make software, obviously the Microsoft Office package and tons of other things like Azure. But the reason why I have them as the top stock pick for the week is because of their deal with OpenAI. They're going to be collecting a royalty share, basically, of OpenAI's revenue, and that'll allow OpenAI to switch from being a not-for-profit to a for-profit stock. Don't ask me about the details about that. I don't know it. All I know is that's what I read in the news. So that's going to be a boost to margins for Microsoft. Well, let's go ahead and take a look at the numbers that we always love to look at. Are you beating the number? That's the first thing we always ask ourselves, because management has to be able to communicate to Wall Street that they're doing okay, but then beat expectations. And you can see we've got 4 straight beats, an average of 7% on each beat. So now we're going to look at our earnings estimates. How are earnings estimates trending? Well, 353 to 365 looks good. 372 to 378 looks good. 1497 to 1436 and 1739 all the way to 1793. So that's when your real kick from that revenue is going to come, is next fiscal year for Big Softy, Mr. Softy, as they call him. Now, is there growth? I love this for my growth videos. Solid growth. And even the law of large numbers isn't really stopping Microsoft. 14% and 14.4% next year. And that's on a $321 billion base this year, $367 billion in revenue next year. That's a lot of money. All right, how's the valuation? 33 times forward earnings. That's down from your Nifty 50, still a little bit elevated. Price to book is 11 times. This is an asset slim business, meaning there's not a lot of assets. They didn't sell software, so your price to book is going to be a little bit higher. Price to sales at 13 times, but that's ahead of the 18% growth rate that we've seen. So now here's the story. Operating margins going from 35.4 to 35.8 and jumping up to 36%, but we could see a nice kick from the operating margins due to this OpenAI deal. So that is going to help the margin profile, as we would say. All right, let's take a final look at the chart here. Take a look at everything. All right, this was the pandemic back over here where you're going to die. Then we're all coming back thanks to the QE, the tech wreck of 2022. And after that, the stock's just been working. And then this year, this is Liberation Day thereabouts. And ever since Liberation Day, this thing is up and away, and we can see the big distance between the earnings estimate lines there, and that tells you that there's good earnings growth. Stock recently headed higher. I believe that Microsoft has a good chance to continue to move higher and higher as long as earnings keep beating. All right, that's it for me. Now let me hand it off to Andrew and see what he's got in store for us for his top stock pick.
Okay, and thank you, Brian, and welcome everyone. My name's Andrew Rocco. Thanks so much for joining today. I'm a stock strategist here at Zacks Investment Research. I do also manage the Tech Innovators portfolio, and let's jump into my top stock pick for Tuesday, September 16th. And my top stock is a stock that was kind of an internet relic, I would say, but now it is making a comeback in the AI space and it's becoming one of the leaders. This is an old mega cap tech stock and it's Oracle, ticker symbol ORCL, which is a Zacks rank number 3 hold. And really, since that dot-com bubble burst, Wall Street investors kind of wrote off Oracle. You can see from the chart here that it was in a 20-year range. And really throughout this time, Oracle, they still had a nice business, but they were kind of just making a lot of money, but not growing quickly. And of course, Wall Street is kind of a game of what have you done for me recently. And until recently, that business was stagnant. But as I said, I'm going to get into why that has changed. Also, their CEO, Larry Ellison, he does live kind of an eccentric life. He bought a Hawaiian island of Lanai. You know, he's got this massive fortune, but he is a little bit more low key. You know, in terms of his public persona versus his friend Elon Musk or Mark Zuckerberg for that matter. So Oracle, even though it's a large cap, it does fly under the radar a bit, but I'm going to get into why it excites me. So first, let's get into a company overview. And Oracle's first and most well-known product is the Oracle Database Management System. And the Oracle database, it's akin to like a storage control center for companies aggregating massive quantities of financial data, inventory records, and customer information. And really, Oracle operates as a legacy software business that involves maintenance contracts for its database software. And like I said, that legacy business, it remains stable and it is a very high margin business. That said, what moves the stock is growth. So let's get into that. So Oracle broke into the cloud business roughly a decade ago, and it's transformed into a formidable competitor to, let's say, Amazon Web Services or Microsoft Azure. And through the Oracle Cloud infrastructure, Oracle can participate in the AI revolution. So Oracle is unique in the AI industry because it offers a full stack approach. What I mean by that, it acquires the highly sought after GPUs, the graphics processing units from NVIDIA mostly, which are necessary to run those AI workloads. It provides them to its cloud customers. And as part of this one-stop shop offering, Oracle seamlessly onboards customers to its cloud, providing the necessary infrastructure, models, and support to build and deploy AI. So they're already getting those chips from NVIDIA. They have the cloud and they set you all up a one-stop shop rather than going to a bunch of different companies for your cloud needs, your GPU needs, etc. So that's definitely a competitive advantage on the cloud side. And Oracle, in my view, they just reported what I would call the earnings report of the year. And it really underscores how Wall Street investors look towards the future. Because actually, for this earnings report, they missed on the top and bottom line for earnings, but they had some of the most insane guidance I've really ever seen. And that took the stock 35% higher overnight, which is a massive move for a company of Oracle's size. That equates to a single day gain of around 244 billion. And it boosted Larry Ellison actually into the wealthiest man on earth. And let's go over some of the highlights of that guidance. So they have a massive backlog. What you're looking at here, these are the RPOs. Essentially, what these are legally binding IOUs. They're contracts that have already been signed. And Oracle announced that the RPO for them exploded to 455 billion. So that marks a mind-boggling 359% year-over-year increase. They announced 4 separate billion-dollar deals, and that emerged that it was xAI, Meta, NVIDIA, and OpenAI. And then their multi-cloud business, which is kind of a more flexible approach. It enables customers to work across multiple cloud providers, and that's through Oracle. And that segment grew 1,500% for the quarter. So again, these numbers for a company this size are pretty unprecedented. And that's why I say it's the earnings report of the year thus far. And one thing I did want to mention is Oracle has that rare combination that institutional investors look for, which is liquidity and high growth. If you just have high growth, these large institutions that move the market, they're not going to be able to take a sizable position, so they can't do that. A lot of times the larger companies, they're slower growth. Oracle, they have that rare combination. And let's talk about whether the company can kind of meet the high expectations that it's setting. And really, Oracle has beat in 8 of the 10 past quarters. And you're looking at the chart right now. And while many amateur investors do not like chasing these large price gaps, a 35% price gap, what I've found in studying these stocks is that often these large gaps, if they're driven by fundamentals, it's the start of a move. So if you think about Tesla, for example, back in 2013, Meta Platforms, when it was called Facebook, that started with a monster gap and a fundamental catalyst. And you could just go through your historical precedents and you could actually see that if it's driven by a large fundamental catalyst, a sea change that I would call it, often it leads to a tremendous move. So we're hoping that's the same for Oracle. And one thing I did want to mention about the overall market. So we do have the Fed meeting tomorrow. Obviously, 3 and 4 stocks follow the market direction. So I did want to talk about that. Now, I can't guess the short term, but the long-term data about a Federal Reserve interest rate cut near the highs is pretty powerful. And the Federal Reserve has cut interest rates 12 times when the S&P 500 index was within 1% of its all-time high. The market was higher 1 year later, all 12 times. So 100% track record with these interest rate cuts already at all-time highs. And this kind of gives me, when I study market history, it reminds me of the 1996 market. You had this innovative new industry, which was the internet at that point. You already had a hot market, and then the Federal Reserve cut interest rates near all-time highs. That led to a 22% advance over the next year, and it obviously set the table for the internet boom. So now we have the AI boom, which is this transformative technology. The market's already hot, already near new highs. And again, the Fed is looking to cut interest rates into that strength. So we can have some dynamic moves, in my opinion, especially in the AI space over the next year. And actually, I put this PowerPoint together yesterday, but since then, Oracle has been named as one company in a consortium of companies that is going to be taking over TikTok should China and the US reach a deal. So that's a positive that I didn't even mention, but definitely a strong social media company. Oracle, I guess they run the servers for TikTok, so the US government trusts them to run the servers. A lot of people were worried about the privacy situation, so that's kind of why I see Oracle having a piece of that if the deal does go through. And of course, after this tremendous move, their market cap, they certainly have the cash to get a deal done. So again, my name's Andrew Rocco. My stock pick was Oracle, ORCL. Thank you guys so much for tuning in, and be sure to visit our promo. It's Zacks.com/promo. Thank you so much.